Here is a model for swing traders. Swing traders are those who hold trading positions for more than 2 days. It can take several days, or it can take maybe several weeks, and it stands between day traders and position traders. Position traders is someone who can hold a trade for more than 6 months. Now, because price is fractal and whatever you do in the lower time frame or your analysis in the lower time frame can also make a model in the higher time frames, and also give you positions in the higher time frames that you can use to swing. So for the model I've been using, I have tried to identify positions that can be held for long. Now this is the daily time frame. Actually, for this model you can start with the weekly time frame, right, or the daily time frame. And for swing trading positions, you have to wait for quite a long time until you get a setup. So I have this Wednesday 13th 25th candle bullish, and then the next one is bearish. It sweeps the high of the previous day and closes within the range of this day, this previous day candle. So what you want to do is to use this candle as a dealing range, and then you want price to come to the 50% of this dealing range above it, or what we would call the premium zone of this dealing range. And then the next thing is you want to go the 4-hour time frame and identify a candle range within that candle range that is going to give you setup. For example, you can notice we have this dealing range, right? And then at the premium of this dealing range we have this candle. So the 5 a.m. candle range, and then this one manipulates and sweeps the high of this previous candle, right, like that. And then now you have a dealing range within a dealing range, right? So having that, now we have this, right? Good. So with this, now you want price to come to the premium of this dealing range and look for entries. You can look for them in the 1-hour time frame, the 30-minute time frame, the 15-minute time frame. Let's see if we'll find something in the 1-hour time frame. So what you're looking for ideally is price reacting off recent fair value gaps or clear fair value gaps from that zone, right? So to try and clear things up, I'll just delete this dealing range, and then you have 30 minutes, nothing is clear on the 1-hour time frame. Going to the 15-minute, the 30-minute time frame, we have something clear, I think. Yeah, so we have not really, there is nothing clear in the 30-minute time frame. 15 minutes, you want to have a very clear fair value gap or inverted fair value gap where price is reacting from. So nothing clear from the 15 minutes. Let's go to the 5-minute time frame. Yeah, it's quite a stretch. Yeah, I think we have something clearer on the 30-minute time frame. You have this recent fair value gap, right? So with that fair value gap, now you want to frame an entry at this point. So you can see a fair value gap in the 5-minute time frame. You can change the color, and then price goes into it and reacts with an engulfing candle. Again, dealing range. Just see the way we are layering these dealing ranges. we want price to come to this area, but you will notice this price is not coming to this area, and you ask yourself why. Because we have a fair value gap right here up to this point, so price is not coming off this area. So why do we want to consider taking trades lower? We have this engulfing candle from this fair value gap, another dealing range, right? Take this, and now we want to frame an entry in the 5-minute time frame. So this one should give us something. You see, at the midpoint of this dealing range, price comes back now and gets into this area. At this point, just take a straight market execution and run, right? So because you're holding this trade for quite a while, maybe you will want to consider placing your stops above this or above this point, right? Price has reacted off. Let's use this fair value gap as our stop loss point. So above this fair value gap, and now you want to hold this trade for as long as you want, right? So you can see price tried coming back, almost hitting our stop loss. Yeah, that can happen, by the way. So 10 pips stop loss to be safe, because these are swing trade. And then now you are holding this trade for I don't know how long. Look at this. I don't know how long. I don't know how long was this. So 8.81, if you're targeting a 10R, that was good, right? Targeting a 10R. Let's see how long this trade took. This is from 17th of August to 20th, so those are 3 days. Should we have any other target? Let's go to the 15-minute and see if we have any other targets. So we have this low here, several lows here, right? So you can also have that as a target, and then you keep holding this trade. Now when you get into such an entry, you want to manage the trade, and trade management system, because you are holding this trade over a number of days, you want to use a higher time frame PDRAs to support price lower. So for this, we are using the 1 hour time frame, and we are going to utilize fair value gaps. For example, you have this fair value gap right here, right? And then price goes lower. In fact, as you do this, you want to consider adding onto positions, right? Because you're targeting this low, you want to have a dealing range from this point to this point. So any PDRA that gives you an entry in the premium zone of this dealing range, you will want to take an entry. And already you have this fair value gap. So this fair value gap 1 hour time frame is going to give you an additional entries to go short. Now, so what do we do at this point? What you want to do is you want to identify. Let me just make this a bit thinner, because you already see price hit that take profit. So consider this fair value gap. Price has given us an engulfing of this fair value gap, and then premium discount entry at this point. So your additional positions you've added there, right? And then when you add this position, now you want to move your stop loss. You see the stop loss you put right here at this point. You can see it, this stop loss, this one here. You want to move it to this point. You want to move it to just above this fair value gap, right? Once you do that, you've taken this entry, your stop loss is also above this area, and now you are holding another trade again. So entry at this point, stop loss above that, and you're holding another trade, right? So maybe you want to hold together with the other trade as well until you get to your intended area. So holding on to that position, you want to look for other fair value gaps. Fair value gaps will always be respected. So for example, this fair value gap, we wanted it to be respected to tell us that it is time to close the trades, but instead price goes above it and ramps back below it, right? So that one is giving us a sign that price is going to go lower. And then when you extend this inverted fair value gap to the left, you can see price comes into it and drops, right? Giving us a what? A dealing range, another dealing range, right? With this new dealing range, where we're taking another entry, you can take another entry at this point, right? Remember, this is in the 1 hour time frame. So an entry there, you can go to the lower time frame and get a clearer entry, but just for demonstration purposes, just place your entry there. Stop loss about that candle that has given us that range, and then you also want to hold this trade up to that time when you want to take that TP. And then at this point, because you have this running in profit and you have this running in profit, move your stop losses just above this inverted fair value gap that has given us this price, this setup. And then now for this point, you're just holding and looking for any PDRS or fair value gaps and inverted fair value gaps that will support price lower, and we are not seeing any. So at this point, yeah, no clear fair value gaps actually. So you can see we have a fair value gap here. Price closes above it. So remember, this point you've already hit our take profits for all of these trades, all of them, right? So this and this and this, so those are 3 positions. You want to look for maybe other entries that will support price lower, but at this point you can see a fair value gap, price returns and closes above it, and then we have price doing this kind of thing, rejection, and then close above it with an engulfing candle. At this point price has reversed, so there's no need of trying to get into sales right now. At this point you are good. So let us look at how long this position took, right? So from 17th August all the way to 22nd August. Those are how many days? 5 days of holding that trade, right? So you can actually calculate the approximate net risk reward. This was 15.56 and this is 8, that is 21, that is 23 plus 6, we have 29, almost a 30 R. If you're risking 1% of your trade, you've grown the account by 30% just in how many days? In 5 days. So that is a model you can use to swing. I will post more videos using other examples, and then of course we are here to learn, we are here to grow. So if you find this helpful, you can look at it. If you have any questions or inquiries or comments, you can also raise them in the comment section. And yes, so all the best. Bye bye.